It is a pleasure to be here with you this evening. I want to thank Barry Bluestone for inviting me to join his class. I've had the pleasure of working with Barry for many years now on lots of public policy issues, from housing to economic development to workforce issues. And you're very fortunate to have such a smart, knowledgeable, and a great person leading this class. So Barry, thank you very much. But I also need to thank Governor Dukakis for his very gracious introduction. As he told you, I was the staff director at the House Ways and Means Committee from 1985 through 1990 when Mike Dukakis was the governor of the state. And I have to tell you, that was one of the most exciting and fulfilling jobs that I have had. And he does often give me a lot of credit for Mass MoCA in North Adams, and I do agree with him. If you haven't been out there, you need to go. It really has become an economic engine for what was a very poor part of the state. I happened to grow up there and went to Williams College next door. The whole idea of Mass MoCA was spawned at Williams College, and so when the mayor of North Adams and folks from Williams came to the State House to present their case, weren't they pleased to know the staff director, A, grew up in North Adams, and B, went to Williams College. So, so I was happy to play a role, but I have to say it wouldn't have happened without the leadership of Mike Dukakis. There were a lot of skeptics about investing $40 million in North Adams, where frankly most reps and senators weren't even sure where it was. But he pursued and insisted and made it happen. And today, as he said, and I agree, it's made a huge difference in that corner of the state. And my dad and a lot of relatives still live out in the Berkshires, so I have plenty of opportunities to get out there and see it. So anyway, thank you, Governor Dukakis, for your introduction, and but also the role you played in that. So Barry asked me to talk about two specific areas of social insurance, particularly workers' comp and unemployment insurance. And it actually was great to follow Steve, who talked about the inception of a lot of these social insurance programs, because these are two kind of components of the broader picture of social insurance that we've adopted over the years. And I think I'm not doing this right.
Push the arrow key?
Oh, okay. John, I think I did something to the screen that you got to fix. Gotcha. Okay, great. So workers' comp and unemployment insurance, they're both very important to workers in Massachusetts. They are part of the social safety net. They're very important to employers because we view them as part of the covenant between employers and their workers who lose their jobs through no fault of their own. But they're also important to employers because they finance both of these programs. And to the extent that we adopt public policies that make them more expensive or inefficient, or that they don't work right, that clearly impacts the ability of employers to finance them. So I'm going to talk to you about both of those programs, describe to you a little about how they work, talk to you about some policy choices we've made here in Massachusetts that impact them, and then, as Steve said, I hope that we have a lively discussion. So just as an introduction, for those of you who aren't too familiar with these programs, as Steve mentioned, they provide a wage replacement for employees, basically who lose their jobs through no fault of their own. In the case of workers' compensation, it's wage replacements for people who are injured on the job. And for unemployment insurance, it's wage replacement for people who are laid off, who are able and available to work and actively looking for employment. Both programs have their origin in the federal context. Steve mentioned that unemployment insurance was actually part of the 1936 Social Security law that was passed. So the unemployment insurance was established federally, but states are given a lot of authority in terms of administering them, determining what the benefits are, what the eligibility is. So Massachusetts plays a very important role here. Workers' comp, it was actually federal court cases that paved the way for states to adopt workers' comp systems. Basically, the courts had to say that states couldn't take away the ability of employees to sue their employers for workplace injuries and instead set up a kind of no-fault workers' comp insurance system. So The origins of these programs are in federal law, but the states have lots of say over how they're administered and what exactly the benefits are. And I'd like to just say at the forefront that my organization, I should tell you a little about this, strongly supports both of these programs, but we're very active in terms of monitoring them and weighing in when we think things need to be changed. And just a little about Associated Industries in Massachusetts. We're a business association, an employer association here in Massachusetts. We have about 6,000 companies that are members of the organization. They range from big household name companies like Raytheon and Fidelity and Liberty Mutual to small mom and pop employers. We represent companies in all industries. Our origins were in manufacturing back in 1915, but today our makeup is more like the rest of the state economy. And we cover the whole state from North Adams to Cape Cod. So very diverse, large employer association, and we actively represent the interests of our members on Beacon Hill on issues like workers' comp and unemployment insurance. So a little about workers' compensation. So we're actually celebrating the 100th anniversary of the passage of the first workers' comp law in 1911. Believe it or not, I went to a party in March at a big Boston hotel where we lavishly celebrated 100 years of having a workers' comp law, and it was amazing. There were workers' comp attorneys and insurance executives and organized labor and business groups were there. But what's interesting, everybody today says, we really did get this right for the most part, and we have a very successful and well-run workers' compensation program here in Massachusetts. What does it do? Well, it really removes the ability of the employee to sue their employer when they sustain a workplace injury. And why is that important? Prior to the passage of the workers' comp law here in 1911, that was the way that if an employee was injured on the job, the way they got compensation was for them to sue their employer. And they had to prove negligence, which was very difficult. And so the system really didn't work for employees. And frankly, it didn't work for employers who cared about their workers and wanted them to be compensated when they were injured on the job. So workers' comp is really the first example of no-fault insurance. If you're hurt on the job, you were able to collect wage replacement without having to prove negligence. All you have to do is demonstrate that you were hurt in the course of being an employee. Workers' comp is the exclusive remedy for workplace injuries, and I would argue, and I think most people would, that our system here in Massachusetts works particularly well. How is it paid for? It's paid for by employers. In Europe, in many countries, employees share in the cost, but in Massachusetts, it's employers who pay for the program. They either provide private insurance. Liberty Mutual is a big workers' comp insurer here in Massachusetts. My organization actually created a workers' compensation company back in 1988 at a time when the workers' comp system was kind of in crisis here in Massachusetts. Today that company is known as AIM Mutual. It's just writes in Massachusetts, but it's actually the third largest writer here in the Commonwealth. So you either buy private insurance or you self-insure, and the rates that employers pay are based on their experience rating. So employers that have a very good safety record, well, they get rewarded because their rates are lower. Employers that don't have a good safety record pay higher rates, and that we believe is the way it should be. And what are the benefits for people who are injured on the job? So workers' comp pays for lost wages. It will pay for vocational rehab to help somebody get back to the workplace. It pays for any related medical care, so any hospitalization or other medical costs associated with the workplace injury. And and if it's a very serious very serious injury, it could pay potentially lifetime medical care. So very extensive medical care coverage, and there's death benefits to both spouses and dependents. So I wanted to talk to you a little about the reforms in 1985 and then in 1991, because I think they highlight policy decisions that moved the pendulum, from our perspective, too generous to employees and too anti-business in one way, and then have moved it back, I think, and found a good medium right currently. So in 1985, the legislature amended the workers' comp law. They were trying to address two particular problems. there was a huge backlog of cases, months if not years, for people who were hurt on the job. These people who were hurt while they were waiting to have their cases heard and decisions made were not collecting any wages. So they were going without any kind of wage replacement. It was a very untenable situation, and employees and employers didn't like it as well. Part of the reasons that there was a big backlog is there just wasn't adequate funding for the Division of Industrial Accidents, which was the state agency that hears disputes and resolves differences. So the legislature was trying to address the backlog, provide proper funding so the system could work overall. And they did do those things, but I would argue the pendulum swung too far. The law increased weekly benefits, and as a result, 20% of injured workers actually earned more when they were out collecting workers' comp than they were earning in their jobs, which obviously provides some disincentive to people returning to the workplace. There was a huge increase in claims and claimants from 29,000 in 1987 to 40,000 in 1991. Workers were allowed to take lump sum settlements, which insurance companies might offer them. Many workers viewed them as kind of a one-time pot of gold remedy, and lots of workers took them, but they were very expensive. Unfortunately, because of all of these things that were happening, many insurers actually left the marketplace. So a lot of the major national carriers left the marketplace here in Massachusetts. Premiums grew at an astonishing rate. Costs for employers increased from 100% in 1988 to 1991. And most employers, and most of the premium was in what is called the high-risk pool. So insurers wouldn't even write this business. Like in auto insurance, we have a high-risk pool for drivers who have a history of accidents. Well, we have a high-risk pool for workers' comp as well, and 65% of all premium and 90% of all employers by 1991 were in the high-risk pool. So just was not a situation that could go on. The group that I work for, AIM, got very involved in pushing for a reform which occurred in 1991. And I think the pendulum swung back, and I would argue is kind of in the right place right now. What did the reform do in 1991? Well, it reduced the duration, the amount of the benefits, so that 20% of workers who were making more on workers' comp than they were when they were working was addressed. The Division of Industrial Accidents did a couple of very good things. They created medical treatment protocols for treating workplace injuries. They eliminated the doctor shopping that used to occur. An employee would hire a doctor, the employer would hire a doctor. We'd have dueling doctors fighting it out before the DIA. That was eliminated. Claims have been reduced to about 12,500 today. I mentioned 65% of employers were in the high-risk market in 1991. Today, 11.2% are. Most of those big commercial insurers that left the state are back, so there's a lot of insurers writing workers' comp in Massachusetts. So we have a highly competitive marketplace, and employers have lots of choices of carriers. And one big change, I think, and I give a lot of credit to employers and insurers here, is there's a much greater emphasis on workplace safety than there used to be. As I said, your workers' comp rates are experience rated, so employers who have a good safety record benefit because they pay lower rates. There's been a huge emphasis in Massachusetts in the last 20 years about improving workplace safety, because ultimately what you want is have a very low or non-incident of workplace injuries. And it's not unusual to walk in manufacturing facilities and see right at the front door they keep track of how many days they've gone without having a workplace injury, and they're very proud of it. So one of the successes, I think, is the emphasis that we now place on making sure that the workplace is as safe as possible, and these injuries don't occur in the first place. So I would say workers' comp, we're in a pretty good place now. We work closely with the AFL-CIO, is the organization on Beacon Hill that represents labor interests. And it's interesting, 1991 is the last time that law was reformed. And although we have some ideas that we'd like to see, and they have some ideas that they'd like to see, I think we all agree that it does seem to work pretty well right now for employers and their employees. So So I think we've got this done pretty well for Massachusetts. So let me talk a little about unemployment insurance. So we're actually celebrating an anniversary for the first unemployment insurance law too. As Steve said, this was passed in 1936, so it's the 75th anniversary of the state's unemployment insurance law. Actually was invited to a little celebration for this, but because it wasn't the 100th, I guess it wasn't quite as big a deal. It was at like Union Hall in Dorchester. They gave tea and cookies, and about 30 people there. So maybe on the 100th we'll have a much more lavish celebration. But 75 years. How does unemployment insurance work? Well, this too is paid for by employers. In Massachusetts, they pay about $714 per employee per year. The total system costs about $1.6 billion, so it's not an insignificant cost. What do employees get? Well, if they get laid off from their jobs, they get 50% of their weekly wage to a maximum of $653 per week. So the most you can collect is the $653 per week, but you get 50% of your job, 50% of your wage, or that amount, whatever is greater, or whichever is less. Massachusetts has a few things that are kind of unique or more special than exists in other states. I just thought and again, this gets at that whole issue of we've made some policy decisions here that impact the program, impact the benefits that people receive, but also impact the cost that employers pay to finance the program. And I just listed a few of them here. Massachusetts is the only state in the nation that offers 30 weeks of benefits. All of the other states offer 26, and actually a few now offer less than 26 because federal extended benefits, and I'll talk a little about that in a minute, have picked up where the states have dropped off. In Massachusetts, employees qualify for benefits after working for 15 weeks or $3,500 in earnings. Most other states require 20 weeks of work, so this is that whole attachment to the labor force. How many weeks do you need to work in order to be eligible? We're pretty generous here in Massachusetts compared to our counterparts elsewhere in the country. In Massachusetts, we provide a dependence allowance, so if you're collecting unemployment insurance, you can get an extra $25 per dependent. I actually think that's a good thing. But only 14 states have a dependent benefit. So again, we are more unique than the rest of the country. And so because we have some of these generous benefits and some of this generous eligibility criteria, and we may as a society decide that, that's okay. We want to provide that kind of safety net here in Massachusetts. But there are consequences by those types of decisions. So Massachusetts today is the third most expensive state in the country. We're 44% above the national average, and only Michigan and Oregon are more expensive than here. And I would say to you, because I hear this all the time from our members, Massachusetts is a great state to do business in a lot of ways. Part of it is, a great part of it is the really terrific workforce, highly educated, motivated, talented workforce that we have here, the great universities like Northeastern and others that provide lots of top talented young people into the workplace every year. But our members are also competing with other companies in other states and globally, with companies where the cost of doing business is a lot lower. CNBC did a competitiveness study earlier this year. Massachusetts overall ranked pretty well on it. We ranked 6th in comparison to the other states, but they had subcategories, and on the cost of doing business, we ranked 41st. Not a surprise to any of you who live here. The cost of living is high, the cost of housing is high, the cost of health care, I was talking to the governor about it before we started, highest in the nation. We've got to figure out a way to deal with it. And unemployment insurance is nothing in terms of the magnitude of, when you compare it to the cost of health insurance and what an employer pays. But, we're right up there. And, so there are things that we need to consider. Is this an area where we want to be very expensive, or are there compromises that can be? So some possible reforms that have been discussed on Beacon Hill and are still being considered. Many of these we support, although not all. we actually think unemployment insurance is experience rated like workers' comp. So as I told you in workers' comp, if you have many workers getting injured on the job, it's going to be reflected in higher workers' comp rates that you pay. The same with unemployment insurance. The higher the number of workers collecting because they were laid off by your company, the more you're going to pay. The idea is to reward companies that have stable workforces and aren't putting their workers onto the street and hiring them back, and so provide some incentive. But the use of experience rating in our system isn't that great. So there's some minor incentive, but not really a great one as exists in workers' comp. So we actually support the greater use of experience rating. We like to reward firms more who really do work hard to provide a stable workforce. And for companies that have very seasonal workforces and people in and out of their workforce, well, they should bear the cost to a greater extent. We could reduce the benefits from 30 to 26 weeks and join every other state in the nation. Personally, we think that's a reasonable one to do because although it's nice to be generous, there's a cost that comes with it, $50 to $90 million extra that Massachusetts employers pay for this benefit. And as I'll show you in a moment, in times of high unemployment, the federal government actually kicks in. And so we don't need to be providing more generous benefits than the rest of the country because the federal government kicks in with something called extended benefits. People have talked about eliminating the dependency allowance. I actually don't think that's a good reform. People with larger families with more dependents, you just need more money to support those people when the wage earner loses the job. So, but again, that's one where most states don't provide it, and Massachusetts does. We would like to see the work eligibility requirement increase from 15 to 20 weeks. We'd like to show that there's some attachment to the workforce for people who collect, and that people who bounce in and out of jobs, there just shouldn't be an incentive for them to do that. And so this again would bring us more in line with other states. And then in the last one, the UI health insurance program, Massachusetts passed, and of course Governor Dukakis knows all about this too, and I was there then as well, in 1988, a universal health care law. One piece of it created a program for people who lose their jobs and who are low income, and it allows them to get health insurance. It's called the Medical Security Program. Frankly, it's been a great safety net for people who do lose their jobs because you often lose your health insurance. And if you're low income, there's no way you're going to be purchasing health insurance on your own. So we have a separate program called the Medical Security Program. As part of health reform that was passed here in 2006, the state did create another program for low-income people called Commonwealth Care. So now we have two programs that are running side by side. They have different eligibility requirements, they pay different benefits, they're administered by different insurers. Our suggestion is, we need to look at merging these two programs. They're both, the population they serve is the same. They're low-income people. One group is unemployed, the others may be employed, but both don't have access to health insurance. So merging the UI health program into Commonwealth Care is probably something that needs to be considered. I talked briefly about federal extended UI benefits. So UI programs are run primarily at the state levels, but in terms of high unemployment, the federal government pays extended, what was called extended benefits. So obviously we're in a period of high unemployment right now. We've had about 99 weeks of benefits for the last 2.5 to 3 years. So people who lost their jobs and have been in the workforce long enough, and there's several other conditions as well, have been able to collect for 99 weeks, which in this economy with unemployment nationally over 9%, Massachusetts we're faring a little better, but if any of you know people who are looking for a job, it's pretty difficult. So this safety net that the federal government provides, has meant survival for lots of families. It's paid for by federal UI taxes, so Massachusetts employers are spared this, but there is a consequence here because, as I just mentioned about our health insurance program, people who sign up for our unemployment health insurance program, because the weeks have been extended from 30 to 99, people are staying in that program from 30 weeks to 99 weeks, and that is paid for by Massachusetts employers. The assessment on employers to pay for that program has tripled over the last 3 years, and the program's still running a deficit. So, that's a challenge that we're trying to figure out how to deal with this. As I said, one solution is to merge it with another program that was created as part of our health reform law in 2006. But then another policy question I just think some economists have raised, and would be interesting to talk about these. So for some families, this has been the safety net to get them through in a really tough economy where there aren't many jobs. But for some people, it impacts their job search. 99 weeks is a long time to be collecting, and frankly, if you don't need to work, or if you're making enough unemployment insurance to get by, does this impact your willingness to search for a job? And then a lot of people and a lot of economists have raised the notion that when people are out of work for up to 2 years, it's really difficult to come back into the workforce. The skills have changed. Being out for such a long period of time is just not an attractive thing for most employers who are looking at you. So, despite the fact that it's a safety net for a lot of people, again, in this really tough economy, it does impact the ability of some people to rejoin the labor force, and we're going to need to think about retraining programs and all of that sort of thing when hopefully the economy gets better. So I just guess I wanted to conclude by saying a couple of general observations. Workers' comp. I actually think Massachusetts has this pretty much right for both employers and workers. The system, costs to employers for workers' compensation have dropped over 60% in the last 15 years since we did the reform. And Massachusetts was just ranked #1 by Risk and Insurance magazine for the best workers' comp system in the United States. So we should all be proud of that, and it's again a system that works for both workers and employees. Unemployment insurance, as you saw, we are very expensive. It's partly driven by our generous benefits decisions that we've made here to provide workers with extra protection and more generous eligibility. I think we need to just revisit those from time to time and see if that still makes sense. Because as much as it's a boon to people who lose their jobs, and certainly I'm thankful that this economy, that I and my family are gainfully employed, but there are consequences by the decisions that we've made here, making it a very expensive system and just making it more challenging for employers to compete with their counterparts in other parts of the country. So I'm going to conclude my comments there, and I'd like